Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, November 22nd, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here that price is trading right at the previous session's highs and then bounced back off that level. So right here you had the previous session's high. Price went right into it, to the penny, to the tick there, and then backed up off that area and then rotated back below VWAP for the day so far. Right now that's an inside day. Even though it hasn't broken one tick above it, it hit double top. So inside day yesterday to finish the session, and then right now today we're currently seeing an inside day developing here. This is kind of a narrow range here that's developed here in the midst of the uptrend. Again, there's an easy break back below recent lows here could open up a one-day stop run that could be pretty significant. However, in this market, no pullbacks have gone without being bought for new highs. So it's been very strong ever since this major rejection here. You had a hard shakeout leg. It's been very, very bullish ever since, and no violation of previous support has been seen so far. So it's going to take quite a bit to see that break here, but it can happen. Overall, I would say that if it does break down, watch for signs of rejection, anything like this, because that could easily lead to a major stop run day up through 3-day highs and lead to a major day up. So again, this market continues to show strength here. Hard to bet against that strength until proven otherwise. Got to continue to watch the opposite end of the range. Obviously, anything that breaks 30.50 here would be significant, but a pullback as deep as 30.50 could still be a buying opportunity for a continuation higher. All right, let's take a look now at the NQ. The NQ right now showing very similar price action here to the ES. 5-6 day range here, very narrow. It's been trading around that 8,300. You can see the previous session's high right there came right into that 2-day lows and then pushed back off of it today. Very similar price action. It's already showing a little bit of a move above the yesterday's high and then pushing back below it. A little bit of an head and shoulder type of pattern in the 512 tick chart right now on the intraday. So again, right now it looks like that after this hold it broke down, and now bears are trying to defend here for a shot lower. Again, that's what it's trying to kind of set up, but this trend has been so bullish that any pullback here has been rejected, and it's led to more strength. Failed lows, those types of things. Failed lows in this move higher have been traps for a continuation higher. So while we could see a little bit of weakness here, again, keep an eye on how price responds to these lower prices, because any rejection could be an opportunity to buy. Above 2-day highs squeezes, new highs above 8,400 could be around the corner in that scenario. All right, let's take a look now at crude oil. You'll see here with crude oil right now trading around the 58.30s, above 58s. Right now a very small little range here, all trading above 58s. It's 28% of average range right now, trading just 45 cents. It's been averaging $1.61 on a 10-day basis. So that's the current 1-day. This is the 10-day average. So that's very, very narrow, but that is usually what tends to happen after you see behavior like what we've seen the recent couple of few days. We saw a hard push downward on a failed high on 2 days. Then we saw a failed low and a harder push up to take out the highs. So it's been a very aggressive 4 days in crude here, and to think that we might get a digestive day here today is not a stretch. So overall, based off of the 9-10 day average range here, we likely have a little bit more upside that could take us somewhere above 59, maybe 59.5, 59.65, somewhere in that zone would complete the target average here from this low. So we still have a little bit more upside that could be seen ahead. Remember, we are trading within this channel here, so if we do get up into the 59.65 or 60 zone, we may start to see some near-term rejection that could bring us back down to, say, 56.83. So right now that's the idea for crude oil. Likely to see further range-bound activity today with an upward bias, and over the next couple of few days we could still see a continuation toward 59.65 and if any rejection is seen up there, it could rotate right back toward 56.83. All right, let's take a look lastly at gold futures. With gold here, it has taken quite a bit of time to try and get off the mat here, and when it takes that long to get off the mat, and it continues to trade around the rejected previous lows there, you know, it's only a matter of time, it feels like, before the stops come out and whoever was long in here gives up. And so below 1460 really runs the stops to the downside. That would be a significant event here, and right now we really have a very narrow range to watch. 1480 above that level can open up a quick squeeze. Remember, we were looking for a move somewhere between 1500 and 1515, somewhere in that zone. That could still happen, but if failure to hold 1460 will run these stops, and now instead we're dropping quite a bit lower. So right now we have a very narrow range that's developed here over the last 6 to 8 days, maybe even longer here. And again, the fact that we're holding above 1440 here is very important, but we haven't really tested that level. So failure to hold 1460 likely double dips down. That could bring us even as deep as the 200, and perhaps that could be a buy. So right now, again, no love above 1480 here, and that could lead to a stop run down if 1460 is taken out. All right, that is it for now. We'll see how this plays out the rest of the session. Good luck, trade well, happy Friday. Please be sure to like, share, and subscribe, and I will see all of you in the trading room. Take care.